TheoTrade. This is Don Kaufman. It's March 31st, 2023. Just minutes left inside of the trading day, and it is the end of the quarter. Are you chasing this market rally? Of course, that's going to be the topic of conversation here on this TheoTrade weekend update. Right down to business. We are squeezing to the upside here on this Friday afternoon. And look at this, the SPOs are up, another 50 handles being led in large part by none other than it's big tech. It's been big tech. I mean, look, the Nasdaq here, all right, up 1.5%, another 1.5%. But I got to tell you, the intraday chart, by the way, we are ripping right now into this close. The intraday chart, it doesn't do it justice. I think you got to actually look at the daily chart. The daily chart is like, hey, look, you know, we were down here at 38.50 in the middle of a banking crisis a couple of trading sessions ago, and all of a sudden explodes. We exploded through. And again, let's be really detailed with the levels. We exploded through the 39, 31 inside of the S&Ps. We actually, you know, just kind of skirted that. We just exploded today right into the 41.06. That is a critical level. And I got to tell you, we sliced right through it like butter. And we are squeezing right now, though, into this close. And by the way, I just cannot stress that enough. When I say squeezing into the close, it's like, hey, it's the end of the quarter. Okay, there's nothing left to buy. I have to buy everything. And again, you kind of feel like people are chasing this, but is it overbought insanity? That's, you know, one of the things. I think a lot of people are looking at this and they're all thinking the exact same thing. They're like, what good has transpired economically, fundamentally, with the Fed? Is there any good that has actually come out of like this last week of trade? And you can't come up with too many reasons. People are like digging deep for this. How about this? There's just record shorts on the books, meaning like the CME, Chicago Mercantile Exchange. For those of you that do not speak acronyms in the trading world, the CME stands for Chicago Mercantile Exchange, actually announced that they have the largest short position on record right now inside of the S&Ps. So you look at the S&Ps, they're like squeezing to the upside. It makes, if you will, like, you know, the perfect picture for a squeeze opportunity. For those of you that have absolutely no idea what I am discussing when I'm saying like the CME has record shorts on the book, if you're out there, okay, and you are short, for instance, these S&P futures, you're short those S&P futures, hey, look, if we start to rally and we start to rally, there's only one way out of the position. That is to buy. Why? Because when you are short, you are opening to sell the position. How do you get out? Okay, of the short position? By buying. And the more you buy, the more other people, what? The other shorts actually get squeezed. So what do they have to do? They have to buy. And all of a sudden we perpetuate a wicked rip your face off rally. That's what it's termed. Okay, the wicked rip your face off rally. 2 minutes left inside of the trading day. Oh, you are seeing just that. Okay, this is an all-out panic, and it's not about where we're going next week. It really isn't. Like if you're looking at the trade activity right now, you're like, this is ridiculous. I can't take the pain anymore. This has nothing to do with next week. This is the here and now. This is people panicking to actually cover positions, because if you hold the position into the close, it goes full boat margin. So for those that are trading, like for instance, S&P futures or micros on an intraday basis, if you hold that, okay, right into the close, it goes full margin, and it can be a lot. You know, you have a quarter of the margin held typically during intraday trade. The moment the bell goes off, that thing goes full boat margin. And so a lot of people are closing those positions, and they're closing the shorts, which means buy-side activity, which is actually generating even more buy-side activity. Again, I kind of call it, you know, a little bit of, you know, overbought insanity, but you're going to look at that in just a moment with some, I'll even pull up some technicals if that does it for you. There are some, I guess, suspect things though on the screen that I want to actually cover here. Because when I start talking about overbought insanity, and I'm like, you know, look, you can pull up the spiders, okay, and we can use like a TheoTrade RSI. This is an RSI Laguerre polynomial. Obviously in overbought territory. Almost everything you look at can be overbought territory. Of course, till you come to something like the financials, which is exactly what we're going to be discussing here momentarily. But you will see stuff like tech, okay, it is on fire out there, just on fire, right? Some of the tech stocks, okay, are ripping just ripping here, all right, except of course if you're Google. And I'm bringing up a few that are a little odd stock out, if you will, like Google, for example. This thing actually broke down this week, and very few people actually caught that. The stocks that are actually ripping, okay, stuff like Meta right to the upper edge of the expected move, all right. Obviously, you've got Tesla outside of its expected move. Nvidia is like the unstoppable beast, which is once again at the upper edge of the expected move. All right, Microsoft right there with it. Look, what I am focused on right now, okay, it's not a lot of tech stocks, all right? The closing bell is coming. It's not a lot of tech stocks that I'm looking at. Here, again, it's a concentration, again, of liquidity into a handful, okay? There's the closing bell. It's a concentration of liquidity into a handful of mega market caps. It's the point that I was making last week, okay, on the weekend update, and talking about like how everything now has become Microsoft, the market capitalization of Microsoft, the market capitalization of Apple, okay? It's never had a market cap move that substantially. You realize that in Apple alone, $500 billion of market cap got added in this quarter. No one has ever seen that, okay? Blanket statement, no one's ever seen that. Look at Tesla, okay? Tesla was a $100 stock. It's now a $200 stock. When you start looking, all right, at its market cap, all right, so it's $650 billion, okay? Do you realize that Apple, okay, added almost the equivalency of a Tesla in terms of market cap? I just want to give you sheer magnitude. And the reason that I'm actually talking about this once again, is that when it comes down to it, as one of my bullets says here, tech, it is the market right now. It is. So when we start talking about overbought insanity, okay, I have no problem, no qualms in saying I am a contrarian. I am actually stepping in, and was stepping in last week and continue to step in this week and actually short a number of products. I am actually outright short some Meta stock. I'm also using some spreads. I've actually taken off a spread already earlier this week. There's just this little bit of a drop in here, and I'll talk about this again. Just that little bit of a drop was enough to actually see like a 30% gain inside of Meta. Nevertheless, I'm actually short stock inside of Meta. I'm starting to step up again and short Nvidia. Okay, I'm just a few dollars underwater Nvidia, but again, I am starting to step in and short a number of the tech stocks because the entire marketplace has become just that. Now, with that being said, so I kind of term this a little bit of overbought insanity, and I'm not here to, say, hey, look, long, short. Okay, I'm going to tell you guys right now, I am short. I don't need to, further, that discussion of like, this is why you want to get short. I can see the squeeze coming in. One of the things that you're going to have to be able to deal with, all right, is being on the wrong side of this. Either you're going to have to be defined risk or being able to, accept a degree of pain. But of course, last weekend's update was like, hey, which sector was going to get pummeled next? And I kept saying, it's going to be tech. Meanwhile, tech, okay, is strong. Let's go take a look at the QQQ for just a moment. I'm actually going to bring up auto expected moves because what I want to show you in terms of auto expected move, and the auto expected move, for those of you that do not speak geek, look, I'm going to zoom in as big as I possibly can and kind of highlight this on the screen, right? I want to make sure that everybody understands. Okay, the dark line, which I'm going to highlight right in the middle of the screen, that's where the week started. And, last week, I was like, hey, look, that was last Friday. I was like, tech is going to get pummeled. Tech did get pummeled on Monday and Tuesday and rebounded, okay, and absolutely exploded in our face. Just exploded in our face. But what you're looking at here, this is where the week started. This is the upper edge of the expected move, the lower edge. The expected move is how the option marketplace is kind of handicapping forward risk. So when we start looking at it, you have to have a lot of respect for this because there's literally billions and billions of dollars, all right, that are being traded on the edge of that expected move. So tech continues to explode, okay, higher here. And it's critically important. And again, in the midst of record shorts, it made for an ideal squeeze, okay? The next thing I want to cover, all right, is a little bit about financials. Now, financials have had some degree of a recovery. First of all, when it comes to the financials, last week the financials ended up unchanged. This week, they are, in fact, at the upper edge of the expected move. So it is to some degree a rally inside of the financials. But the financials, if you actually look at the daily chart, okay, the rally is really, really meager. See, one of the things, again, that I try to express last week that I want to further this week, because I think it's just critical, because people are like talking about chasing a market rally, right? If you're going to chase a rally, to me, tech is over and done with. Like, I'll short tech all day long, but if you're going to chase a rally, here you go. You better look at the financials. You know, when people come down to it and they start saying like, look, this marketplace is just going to keep going up. But if it is going to keep going up, it's going to be the financials. Don't tell me it's going to be tech, because they're going to start to rotate out of tech to some degree. Even though the market is tech, if tech's even stayed flat, the financials could actually bring us a little higher. The financials, though, they're still not performing. This leaves, okay, to me, a tremendous amount of risk on the table, because what's it going to take? The financials could start coming back off over here. You could feel very differently about this marketplace in a hurry. The other aspect worth noting here is, of course, the energy sector. The energy sector right there with it. So the energy sector, I like to bring up again on an auto expected move. It exploded up this week, no question about it. Last week, the energy sector, mild rally. This week, it's a rip and rally, almost. Okay, a 2 sigma move. If you looked at this in terms of a standard deviation, okay, there's a 1 deviation move in here. This move over here, this is like a 2 deviation move. It's big boy stuff, right? So huge move up inside of, again, the energy sector. But I'm going to tell you, that's just not enough to carry this marketplace. And one of the things that everyone has to realize, and they really need to realize this right now, is how much damage has been inflicted on a year-to-date basis. So, you know, we're through the first quarter. Energy is actually down year-to-date, mildly, but down. Okay, the financials, they're down. They're down like 6%. Okay, are the S&Ps down? No. Okay, where are the S&Ps? Up 7%. Why? Okay, because the Nasdaq has come screaming back. So Nasdaq is absolutely flying, okay, in the first quarter here. For what reason? Doesn't matter. It just doesn't matter. At this point, okay, the trade for me, well, again, it's going to be short some of the tech. You can go right in and short the Qs. You can actually use individual products in here, whatever you're comfortable with. I mean, the QQQ is going to be a more comfortable place for a lot of people to step in and short. But if you're going to do it and you don't have ample capital, you do it with defined risk, right? Because tech is the marketplace right now. So, you know, a trade that you can consider, though, if you're not comfortable really shorting tech, you could always go short tech, maybe long a little bit of financials and some kind of a pairs trade. Nevertheless, though, I'm actually short tech and short some of the financials. Why? Okay, because I look at this and take it with a grain of salt. So what? We squeezed up. There's a record number of shorts. People were actually slobbering bearish, you know, just a week ago, looking for us to break back down to the 39.31. Look, I'm one of them, you know, slobbering bearish. And yet here we are higher. And this is stuff that, you know, hey, as a trader, you prepare for it. All right. So again, financials and energy are up this week, but still absolutely lagging. There's another aspect along with that that really perplexes me. I want to bring it to your attention. Everybody sees the VIX, and the VIX has actually come down quite considerably. But what they're not looking at is like when you look at VIX options and you go like 46 days out, okay, the options are still pricing the VIX closer to like the 22 level. To see that very specifically, you look at like the volatility futures. The forward future in volatility prices VIX basically at 22. So even though everybody's looking at the VIX and like, oh, it's collapsed back down to 18, and this is, okay, the lower kind of end of the road, if you will. That's where the VIX, it's been its lower edge of the range. You know, today it's hitting it in the 18-19 realm. But again, forward VIX is actually pricing this all the way back up here at that 22 region. So keep it in mind, because even though VIX feels like it's collapsed, it really hasn't. And with that, all of a sudden, the bonds look like they're ready to break out again. And the bonds, if they do break out, maybe rates are going a little lower over here, might help the banks out a little bit. But wait a second. Weren't we just ducking and covering into bonds? Like this rally in bonds, that rally in bonds right there, okay? That was because financials were diving. The question is, at this point, why are the bonds rallying? Are we actually expecting lower rates, okay, anytime in the near future? The PCE indicator came out. And with the PCE indicator, okay, that ultimately is an inflation gauge of the favorite of the Fed. That actually came in a little bit light today, but it was light by like 0.1%. So nobody cares. Nevertheless, the bonds still look like they're on guard. And something I've been pointing out, the dollar, perplexing. Okay, there are so many indicators over here. Gold. Gold has not gotten crushed. Gold looks like it's about to explode back up. So if you're looking at gold and bonds, and I was talking about this in the Wednesday night video as, risk on, risk off, these are not, they're not making me feel warm and fuzzy about this. Like, look, I'm not going to discount the rally that has ensued in the marketplace. Okay, it is what it is. Like, again, it's spectacular rally. I don't want to discount that. I also want to look at the SPX and tell you, like, wow, we are outside the upper edge of the expected move and then some. This was supposed to be an $89 move this week, plus or minus. Monday and Tuesday, we did absolutely nothing. On Wednesday, we turned and burned to the upside. Okay, we had a little bit more of a rally on Thursday, but Friday has been nothing less than spectacular to the upside. As I said, kind of squeezing to the outside of the marketplace. Nevertheless, we have a 4-day trading week next week, and most people are not aware of that. We have a 4-day trading week, but even more strange than that, if you take a look at the calendar with me, okay, and I'm just going to mark this up really quick. Friday, April 7th, we're closed. We're closed. The S&Ps in market are closed. But wait, there's still an employment situation that actually comes out that morning. How weird is that? It's very weird, right? An employment situation. So the employment data is actually coming out on, of course, a Friday, but the marketplace won't be open. But the S&P futures will be open. Okay, bit of a catch-22. So if you look at the S&P futures, okay, they do have expiration into only, all right, Thursday of next week. They don't even have a Friday expiration. But the S&P contract itself will be open for portions of that. If you take a look at the SPX, the exact same thing is true. Okay, it ends on April 6th. So it was only 4 days to trade next week. And again, it is going to leave us in a little bit of a lurch. I would actually expect more volatility next week. All right, before we talk a little bit more about, of course, next week and the SPX and its expected move, let's talk a little bit about Get Your Trade On this week's profits and losses. So I covered some short puts as we rallied higher. I actually covered short puts inside of the S&P options and futures. I trade a lot of S&P options and futures as we rallied, and I covered those in a number of different portfolios. Look, this is over here on TastyTrade. So if you guys are not aware, I've been trading more and more on TastyTrade. Obviously, that brings me to, well, less. Okay, considerably less now on thinkorswim. And as such, again, I've built quite the little position here, but I'm starting to cover puts. And you can see today, I actually covered the 3275 puts for over a 50% gain. What else? What else did I do throughout the course of this week? Let's bring it back up over here. I closed a Meta trade. Meta, which is the artist formerly known as Facebook, for a 30% gain. I was talking about this a little while ago, but if you take a look at the Meta position, right, or what was a Meta position, I basically put on a spread last Thursday. Meta backed off just a little bit on Friday, backed off big on Monday, was able to close for 30%, over and done with. I sold a bunch of calls in the ES. Okay, by the way, I sold calls all over. In fact, today I executed a number of trades, some of my activity today. I filled in what we term our TheoTrade small portfolio today. I filled in a couple of the different portfolios today. Ultimately, selling some premium. So selling in the micros, selling in the spiders. Okay, selling in the S&P options on futures. You name it, I sold some calls. And you're like, well, why would I sell calls in an up day? I sold calls in an up day because we actually exceeded the upper edge of the expected move. That's one of the primary pieces of criteria that I use to denote when do I sell options premium. Okay, when we hit the upper and or lower edge of an expected move, you should anticipate that I'm going to route trades. And route trades I did. I actually routed some on Thursday. Obviously, today's Friday. I definitely sold some premium. So it puts me into that quintessential contrarian position, because at this point, if we continue higher, look, I'm short calls. But today I just sold some like 4650 calls, right? That is way out there. I mean, this is like 4200 level. So the 4650 calls, I was able to sell those. Okay, look at this. I have to scroll up there. Ooh, it's been a long time. I've actually got to open up like a 5-year chart. Okay, to see 4650, you've got to go back all the way to the very beginning of none other than, I should say, the end of 2021, the beginning of 2022. see markets effectively above that level. So I was able to sell some way out of the money calls because it's one of the bigger rallies that we've seen lately. With that in mind, before I actually jump on to any of the other positions in Catapult and so forth, I think it's high time that I mentioned this because I was saying a bit ago, hey, look, it's overbought insanity. But at the exact same time, and I was reiterating this at the beginning, okay, of the year, right? I asked the question at the beginning of the year, and I want to remind each and every one of you, okay, what's difference with this rally from this rally, from this rally to this rally? I'll tell you what the difference is. This rally that we're in right now, this is smaller than the one that we had at the beginning of the year. It's like people constantly forget. And, the crux of this weekend update was to get to just that. Are you chasing this market rally? Do I think it's safe? No, not even close. Like, look, this rally, first of all, this rally right now, right here, right now. Let's just zoom into it, okay? This rally right now, this could extend a lot further. Why wouldn't it? This has actually been a fairly meager rally. And I said the exact same thing a couple of weeks ago. And you know what happened a few weeks ago? We'd be like, I can't take it anymore. We've rallied just shy of 4,200 on the S&Ps. And then we pulled back hard. It was ugly. The marketplace was unchanged in the year. All of a sudden, it's a rip your face off rally. Okay. If you're chasing it, the next question is, do you trust it? Okay. Do you trust it? Because if you don't trust the rally, okay, you got to be in defined risk. You got to hedge in some way, shape, or form. I don't trust it, but I'm shorting into it. Okay. I don't care. I don't care if we come up to the 4211, because I'll tell you right now, if you take a look at my S&Ps, I've got them all marked up over here. 4211 is an absolutely critical level. Right? We came just shy of it. Where? On the previous rally. And the previous rally before that. And the previous rally before that. That 4211 is a fairly critical level. Nevertheless, you don't have to bank on it going there. But when you start asking yourself, though, okay, what? It's different this time, really? It's different this time only because the rally has actually been much, okay, smaller than some of the previous rallies. This previous rally was, we were under, for instance, 380. Clear up to almost 420. This most recent rally, we started right at 380 and here we are at 410. So it could have some legs, but the previous one's bigger, and the one before that, I mean, from low to high was spectacular. The one before that, look, we were at 370, exploded all the way up, okay, to 430. Okay. What I'm basically saying is, people, I've seen this movie before. Okay, we've seen this movie before for sure. All right, back down to it. Get your trade on. I have a new Catapult position. I do at times play some bullish positions. Just as a nice hedge, I went out and actually sold ES calls to finance, okay, a bullish position in Microsoft. I know it's not what you wanted to hear, but I actually do have a bullish position inside of Microsoft here. You can actually see in Microsoft right there some positive deltas inside of my account, but that's actually financed, all right, by me having sold, again, some premium inside of the S&Ps. So it's kind of a cutesy little trade where I'll go out and sell calls in the S&Ps to finance call spreads inside of Microsoft. That's why we call it Catapult, is one trade is financing, okay, and actually like a projectile for the other. All right, last but not least, of course, we're coming into a 4-day trading week, looking at the SPX. The SPX, as I said moments ago, has exploded outside the expected move, but here's the key. Where are we going from here? Okay, what's the movement capacity for the marketplace? Remember, April 6th, the last trading day, we only have $60 of expected move. $60 of expected move. Now, the reason I want to bring that to your attention, right? So the expected move for next week is plus or minus basically $60, all right, and 70 cents. You can see it right there, right? But it's a 4-day trading week. So what gives? What gives? We moved $60 today. You don't see it? We moved $60 today. They're giving $60 a move-in for the entire week. We moved $60 today. That's insane. It's too efficient of a market. Do not sell short-dated options. Don't do it, okay? You're going to get run over. It doesn't matter what you think is going to happen next week. It's what you know. It's what you see on the screen. When you see a $60 move in one day, and then you have, okay, between now and all the way to Thursday expiration, it's only $60 a movement, okay? What's the point of selling that? Think about that. Look, there's a lot to think about in this weekend's update here, but are you chasing the market rally? I am surely not. I'm on the opposing side of it, and I got to tell you, kind of like the project. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.